Paytm's 18,300 crore rupees share sale via initial public offering, the country's largest IPO, has opened for sale.
Let's just talk about Paytm. Somit, this stock has been in focus for a very long time. We've seen a sharp correction coming in from the issue price. Now, obviously, there's a buyback announcement that did come in last evening. What does this actually indicate? What will this mean for...
Hello everyone, welcome to iExamB. Yes, there is no mistake. You have not opened any news channel for any share analysis. We are on iExamB, but what we were hearing about Paytm, that is one news and case study that I will use to help you understand certain important terms from the financial markets. If you do like this video, please don't forget to subscribe to the channel and press the bell icon. So if I talk about Paytm, Paytm had come with an IPO and we are tracing its journey from its IPO in November 2021 to its buyback that has been announced now in December 2022. And it has been a very, very interesting story, and from the share market point of view, the share has actually declined and plunged around 75% since then. So what was the reason with which Paytm came out with an IPO, and why is it coming out with a buyback now? And in addition to this, we will also talk about the SEBI's board meeting today that is happening and why is it related to buyback. So please do stay on till the end to understand all this. Now, Paytm is a very, very, interesting company and a very good part it has played in the financial inclusion. It has also played a very, very important part in the payment system in the country. It is the third largest payment app in the country, the other two being PhonePe and Google Pay. So it has a good 15% share in the overall app-based UPI transactions that take place in our country. So it came out with an IPO in 2021, November, and that time it was the largest IPO. If I talk about, the top IPOs, which is the largest IPO today, it is LIC. So still behind LIC, Paytm's IPO still remains the largest, which was for approximately 18,300 crores, while LIC was around 21,000 crore. And now, within 13 months, Paytm has announced a buyback for around 850 crores. So why have they done that, and why is IPO done, and why is buyback done, and what are the rules related to this, if any, that the companies have to keep in mind? So if I talk about these two transactions, the IPO details for Paytm, this was size, as I already discussed, was 18,300 crores. The price per share at the time of IPO was 2150, and the face value was only rupee 1. The number of shares that they had approximately issued for that was around 8 crores 51 lakh 16,279. And this was an offer. It was a combination of fresh or new shares plus an offer for sale. OFS stands for offer for sale. Right? This means that existing shareholders are given an exit and some new shares were also issued. So new shares were only worth 8,300 crores, while OFS was around 10k crores. And this happened in 21. If I look at the buyback now that has been proposed by Paytm, the size of this is only 850 crores. The maximum price that they will pay per share will be 810. So see the drastic difference between the price that they will buy back at and the price that they had issued at. The face value continues to be the same because the same shares, they have a face value of 1 rupee, and the number of shares maximum at this price that they will be able to buy back were 1 crores 4,93,827. This buyback is being done from the open market, and the duration for which they will remain open will be around 6 months from the date of the buyback opens. What does open market buyback mean? Why they are doing it is what we will be discussing in this video. So if I talk about the purpose of these two transactions, these two are very, very important share transactions that take place. And if you have been preparing for SEBI exam, you would have come across these terms a lot. And if you are an avid reader of the newspaper, then also you would have come. So this both ways it will be helpful for you to understand it. IPO, which also stands for the initial public offer, and we have also done a conceptual video under our Concept Padhayenge Sabko Sikhayenge series. So if you want to understand it in more detail, you can watch that video too. So IPO, usually the purpose of raising money through IPO is for the growth capital. It is the growth capital. The businesses need money to grow their businesses, to expand, to start new businesses. Therefore, they need money. So it is used for growth capital for both organic or inorganic, like through acquisitions and mergers, and for other general corporate purposes. When Paytm had come out with its IPO, they had given 3 reasons for which they needed the money. This is important to be mentioned, and this is mentioned in the prospectus. Again, prospectus is a concept we have discussed under our Concept Padhayenge Sabko Sikhayenge, and you should be aware of these. You can watch our videos there for more clarity. The reasons for which, or the purpose or the object for which Paytm had raised money through IPO was for growing and strengthening the Paytm ecosystem, which included through acquisition and retention of customers and merchants. And they also wanted to invest in new business initiatives, acquisition and strategic partnerships. So they had earmarked around 4,300 crores for the first object and 2,000 crores for acquisitions, and the remaining amount for general corporate purposes. Now, if we try to understand what is the reason for buyback. Now, there can be various reasons why companies buy back their own shares. Buyback is basically repurchase. Okay, we can also call it the repurchase, where the company is buying its own shares which are already there available with the public, and buying them back, or extinguishing them rather than raising money. So they are taking it back. And this can be for various reasons. The reasons could be maybe the company does not see any business opportunity in which they can invest. So they don't see any growth opportunities in which to invest. Or they have excess liquidity and they want to share that. So instead of paying dividend, they are buying back shares from the shareholders. So they are kind of giving back the money to the shareholders. Or where the company believes that their shares in the market, in the stock market, are undervalued and the market share price is not reflecting their true picture. So in that case, they feel that, they better take those shares back, grow the company, and you give a better return to the existing shareholders. So these can be the various reasons where the companies may look to buy back their shares. Now, why has Paytm gone ahead for buyback? So their board, when they approved their buyback, they mentioned that they are doing this buyback because they think this will be value accretive to its existing shareholders, citing that the company has strong financial performance, it is on a clear path of cash flow generation and excess cash as a result, because of which, their share prices are not really reflecting the true financial performance and capability of the company, and therefore buying back will help to add value to the existing shareholders. So their reason has been basically this, and that they have growth opportunities in which they have money to they can look for investment. So very interesting. One more point I will tell you from the UPI side, right? Because Paytm has a business in the UPI, and they're the 3rd largest app-based UPI app that exists. UPI was actually as the percentage of transactions that can happen through a third-party app. For UPI transactions, there was a limit that was to be followed at 30%. So if I go back to the previous slide here, see the market share here of PhonePe is 46%, of Google Pay is 34.3%, while that of Paytm is 14.6% as of November 2022 data. Now, there was a guideline that was there that required the UPI transaction on one particular app to not exceed 30 5%. However, this was supposed to get effective from next year, January 2023. But in a recent news and a recent guideline that has come, this deadline has been extended, and now the companies have been given 2 more years to comply with this requirement. Therefore, the market share of PhonePe and Google Pay may not have to be brought down to 30% immediately. They have 2 more years to enjoy the maximum or the whatever market share they want. So that is also, why Paytm would have increased their investments, because they were looking at getting into the market share of the other 2 larger players when they would have to comply with this regulation in this year. However, as of now, that has changed. So that was another interesting update. So yes, but having said that, there is no dearth of opportunities for business and growth for Paytm as per their board information, but they think that their shares are undervalued and it's a good opportunity for them to buy back those shares. There's another very important thing that they had mentioned in their press release, which was that their IPO money will not be directed towards the share purchase plan. That means the money that they had used or raised, last year through the IPO, they will not use that money to buy back their shares. Now, why have they categorically said this? Okay, there is a reason why they have mentioned this categorically, and that reason is the guidelines. Okay, and before I move to the guidelines that are there, which will be important for your SEBI grade A exam also if you are preparing, let me tell you that we at iExamB are running a 50 days study plan which we started in December, which is aimed at for your preparation, holistic preparation for your general stream paper 2 and paper 1. Every day we are doing sessions and classes interactive, which are in addition to the already content that is available for you in the form of videos, study notes and practice questions, which helps you prepare 50% faster. And if you want to be a part of this course, you can avail this course at a flat 57% off by using the code SEBI57. So let me now talk about why we were talking about this statement being categorically said by Paytm's board that they will not use the money from the share repurchase plan. There are 2 reasons for it, and they are given in the Companies Act, which is a part of your SEBI grade A syllabus also. One aspect is that which comes from SEBI's side, that I will tell you later, and what comes from the Companies Act. The Companies Act buyback is covered under section 68, and they tell you from where you can use, which money can be used for buying back shares. It could be your money in the free reserves, your securities premium and the proceeds of any other shares. However, no buyback shall be made out of the proceeds of an earlier issue of the same kind of shares. So the shares that they had issued and raised money through IPO, that money they cannot use for the purpose of buyback of the same shares, right? So that is given categorically in the Companies Act. So that is one reason. What is the second reason? The second reason is actually given by SEBI. Okay, and that reason is the what you have told the public while raising money in your prospectus, which I just showed you the object. There is an object of the issue which you tell in the proper prospectus. That is the purpose for why you are raising money, why you need this money, right? And in that they have not stated buyback as a reason, and it cannot be stated as per Companies Act also. So both ways you cannot use this money for the buyback. So that's why they have said that we have sufficient liquidity apart from the money that we have got from the IPO, and we will use that money and not the IPO money. So that is one thing that you need to keep in mind. Other important aspects that are covered in the Companies Act that you should be aware about is the reserves that you cannot use. So, you cannot use money from the revaluation reserve, from the CRR. In fact, CRR has to be created from the buyback, bought back shares, debenture redemption reserve, share forfeiture account, or even the capital reserves. You once the company has declared, they cannot withdraw the buyback offer. So now that the Paytm has said that they will buy back shares and they have declared the amount and the maximum share price, they cannot withdraw this offer anymore, and they cannot also borrow money from the bank to make a buyback. So they cannot use the same shares money, they cannot borrow money also. They can use money or excess liquidity that they may have from their free reserves or the securities premium account. There are certain other conditions that they have to comply with, where the companies have to, that it should be authorized by the articles of association, and a special resolution need to be passed. However, if the buyback is only up to 10% of the total paid up capital of the free reserve, so whatever's net worth of the company is, including the free reserves and the equity, if your buyback is up to 10% of that amount, then you can do it by the board. And that is what has been done by Paytm. Okay, so Paytm actually, by declaring of 1,04,93,827 shares that they will buy back, this accounts for only 1.62% of their paid up share capital, and therefore they fall under this category, and they did not need a special resolution of the shareholders to decide on the buyback. Only a board approval or a board of directors resolution was enough. What are the other conditions that they have to comply with is that the buyback should not be more than 25% of the total paid up capital. Again, it is not, it is only 1.62%, and the ratio of your debt to equity should not be more than 2:1. So that is also being complied by Paytm. So these are certain guidelines related to buyback that have been mentioned in the Companies Act, which are important from the exam purpose also for you. Now, if I talk about other information, once the board resolution has been passed, it also, Companies Act requires that you give this information to the stock exchanges and to SEBI within 2 working days. So Paytm had given it on the same day. In fact, they had been talking about it much before the board meeting also. So that is also complied with. But yes, from your exam point of view, this can be an important information that you should be aware about. Now, what else is there? And does SEBI also say anything in this regard? Yes, it does. So SEBI also has its own regulations, which are known as the Securities and Exchange Board of India Buyback of Securities Regulations 2018. So they were last revised and done in 2018, and they are now also under review. SEBI keeps doing that regularly. And there are, the things that are mentioned in the Companies Act are also a part of these regulations. In addition to that, one important thing that are mentioned in the regulations are the methods through which the buyback can be done. So there are 3 methods through which buyback can be done. One is the tender method, okay, under which the offer is made at a particular price to the public and people can tender their shares in that. And if there are more shares that have been tendered, that on a proportionate and pro rata basis, the buyback is done. So everybody gets a chance to be a part of the buyback. The other is the open market, through the open market, right? What we mean by open market is that either through a reverse book building process, like how we did the IPO, we do the opposite of the IPO, that we invite people, we give a price band, and within that, how many people are ready to give their shares. Or straight away from the stock exchange, like we can buy on the stock exchange, the company goes and buys its own shares on the stock exchange, they can do that. And the third is the odd lot holders, so people who are having odd number of lots, then that system can also be applied. Mostly the first and the second are more talked about, the third is not used much, right? So Paytm has gone actually for this method, open market, and that too through the stock exchange. In that, SEBI gives a condition that the open offer cannot be, your offer from or the buyback from the stock exchange cannot be more than 15% of the total paid up capital. Again, there is no issue because Paytm that has announced it is around 1.6%. 62% only. So they are complying with these conditions. But for you, why is it important is to know these conditions. Now, I also told you in the beginning, I will talk about the SEBI's board meeting. So actually today SEBI is holding its board meeting in which they will be discussing the proposed changes to the buyback norms. These buyback norms which were there in 2018 that were made, the SEBI has reviewed them and is looking to bring out certain changes. So for reviewing these buyback regulations, SEBI had constituted a subgroup, and this was under the chairmanship of Mr. KK Mistry, who is the vice chairman and CEO of HDFC Limited. And this subgroup was a part of the primary market advisory committee. So other members of this committee were a part of this review. And based on their review, these are the proposals that they have made. So as per I showed you that the existing guideline says that the open market offer should be less than 15% of the paid up capital and free reserves. And also there is a timeline that it should be completed within 6 months. Okay. Paytm has made 1.62% open offer, and yes, they have given a timeline of 6 months to complete it. However, the committee has recommended to do away with this over a period of 3 years. That open market through stock exchange, open market stock exchange based route or method should be done away with, and this can be phased out over the next 3 years. First, bring it down to 10%, which needs, and the timeline to complete that should be given only 66 days and not 6 months. This should come into effect from April 2023. Then next year, bring it down to 5%, and the completion should happen within 22 days. And after that, from 2025, this should be completely phased out, and no buyback through the open market stock exchange route should be available. So what will be the alternative? The alternative will be, as of now, there is no separate window because this method exists and you can buy directly from the stock exchange. However, once this is phased out, then there should be a separate window on the stock exchanges for conducting buybacks through the open market. And lastly, there is as of now a requirement that whatever money has been earmarked for buyback, 50% of it should be at least utilized. So in Paytm's case, they have earmarked 850 crores, right? So according to the existing guidelines, at least 425 crores they should use for buyback. However, this is going against the intention of various promoters who may just announce a buyback, but they don't really want to complete it. So to discourage that, SEBI is now proposing that the minimum buyback amount should be 75% of earmark. So if this comes in place, then if this will not apply to Paytm right now because they've already announced, but if it had come into place, then 75% of 850 crores would have been the effective. Plus, they are also adding that 40% of this amount should be used in the first half of the buyback period. So whatever the buyback period has been announced, at least 40% should have been used in the first half. So these are certain proposals which are being taken up by the SEBI board today, and most likely they will go through. There are certain other proposals also made in the buyback regulations with relation to the other methods like the tender offer method and the reverse book building method also. So yes, we will see what all changes does SEBI approve. So this is all about today about buybacks, IPOs. There are actually regulations by SEBI which also tell about the utilization and monitoring of utilization of the IPO proceeds, and SEBI brought certain changes related to that also in the first half of this year. So if you are preparing for SEBI grade A, then do read and do go through those changes also. So that's all for today. Thank you and all the best. Thanks for staying till the end. If you're interested in having a conceptual clarity of such kind and similar kind of topics, then we continue to watch our Concept Padhayenge and Sabko Sikhayenge series. This month, in the month of December, we have taken up topics and concepts focused on the SEBI exam. So all the best once again. Don't forget to subscribe to the channel and press the bell icon and prepare 50% faster with iExamB.